Have you ever wondered how to prepare your credit for the purchase of a home? Well, if that's something that you have thought about, this video is for you. Stick around. My name is Olmos, and if you're not familiar with me, I am a full-time real estate agent in the Northeast Florida area. And just yesterday, I met with a buyer who actually has pretty good income coming in for her from her job that she is planning on using for the purchase of a home. So one of the first things that we do is make sure that they get pre-approved for their mortgage before we start the buying process, which if you want to learn more about that, there's plenty of videos here on my YouTube channel where you can learn exactly what goes into getting pre-qualified. But one of the things that we came across during the pre-qualification for her mortgage with the lender was the credit situation. So most of the time people would want to have somewhat of a credit history already established, and no history is as bad as a bad history. Let me just explain to you why. This particular client of mine had, again, great income, and she had a few credit cards that were offered to her, which she went ahead and applied for and obtained, but she was just not using them at all. Okay, so you have these lines of credit that companies had extended to her based on, you know, her income and her credit profile and whatnot, but she was just not using them, and she had not used them not for a month or two, but for a couple of years. So most of her purchases were being made in cash. And a lot of people think that, hey, you know, if they don't have any debt, that's going to be a good thing on their credit. It could help to have a lower debt, but not having any debt, like not having any credit history, does not help when it comes to applying for a mortgage loan. And let me just explain to you guys why. Part of what the lender does to make sure that you get approved for a mortgage is to look at how you manage your finances. And the way they do that is simply by doing a credit report. And in the credit report, you're going to be able to see exactly which accounts have been given to you, which lines of credits are available to you, and based on the amount of credit that you have been given, how much of that have you been spending? Also, how are you been paying for them? Are you timely on your monthly payments? And all that they need to see is just that consistency of payments. Hopefully you won't max out the total amount that they lend you, but if you want to stay lower than the 50% or lower than the 25% and keep up those payments steadily, that's going to help you tremendously when it comes time to applying for a loan. So there again, you know, I have my buyer that's very interested in buying, has good income, but no credit history. So that did really put a pause on the whole process, because now what she needs to do is go ahead and actually spend some of those credit lines that she has been given and make some payments over a period of maybe 2 or 3 months in a way that it would actually report on the credit bureaus. And then later on we can go ahead and do another application with the lender where they will be able to see now the credit history of those payments that she would have been making. So I just thought I'd create a video in here, so just in case you're out there thinking, hey, I have no debt, that's the best way for me to prepare for buying a home, that's not necessarily the case. You do want to have some credit lines open, but the most important thing is to be consistent with those payments. If you do that every month, just make sure that you keep those payments every month. That's going to help you prepare for applying for a mortgage. That's all I've got. See you in the next video.